guys, Ryan DeMent here from TruVest. Hope you guys are having a great day. On this podcast, we are going to talk about closing costs for a mortgage. And this example is going to be on an FHA loan for $80,000. The reason why I'm doing this is we get a lot of people talking to us and telling us that they think buying a home on with a mortgage, you're going to come zero out of pocket. Well, there are some loans that way. There's a VA and there's a USDA that I know of. And guess what? Got to be a veteran to get that. Or USDA is you basically live in a rural area. Well, everywhere we're working at right now is not rural. And the individuals that are coming to us right now are not veterans. The veterans that we are working with totally understand this process and willing to work through it. But most people that we're talking to, and we educate them up front, that they literally need to have 4.5% of the purchase price in their bank today to make this purchase work. And most of them don't. And they think that they're just going to be able to buy a home with a mortgage with zero out of pocket. So let's get started and go over those costs. So here's an estimated loan cost document that we got from our lender, Land Home Financial. It's from yesterday. It's an FHA purchase. You can see, let me maximize this for you guys a little bit here. You can see the purchase price is $80,000. So let's go through these costs. Credit report. Appraisal fee, $500. Credit report, $45. Processing fee, $595. Administration fee, $825. So these two costs here are from the actual broker. It's a cost that they charge to do business. That's how they make their money. Settlement or closing, this is what it takes to actually close the loan, get it funded, and sent off to the lender. Title insurance, to make sure the title is clean and make sure there's no other liens against it, and that the bank that carries the mortgage has clear title and owns the property outright. Endorsements, these are just the endorsements for the state level at $50. Title insurance, we just discussed it. There's $202 there. Title service fees, $285. This is the title company and what they're actually charging for us to come into their office and have the buyer and us sign the documents. TIF fees, they're basically regulatory fees that we have to do. Recording fees with the actual local county. CPL fee is the licensing fee. And then we have endorsements, recording fee deed, and then sales disclosure. All title costs that I can't get out of, that everybody has to pay, no matter if it's a buyer from, in Arizona or a buyer in Indiana. These are all costs. Now, the costs are different by each state, but at the end of the day, these all have to get paid at the end of the day. So, approximate cost of prepaid interest and escrow and reserves. So, interest for 30 days at $9.95 a day based upon the total price. It's $298. Hazardous insurance, $1,056. Homeowner's policy. So then they'll make the potential home buyer, which is a woman, 2 months of escrow, $176. The property taxes, they'll be also escrowed, $176.70. And then any type of adjustments that are needed to get it to where we close. I think we're closing this on July 15th or so, or July 10th. So cost of prepaid interest and escrows, $1,589.40. Plus the $3,060.76, so you're at $4,650 in closing costs for settlement charges. Now, on the left side over here, this is total funds needed to close. You'll see the loan is $80,000, less earnest money credits. We're providing $4,800 in credits to the actual buyer because it's an FHA and we can do up to 6%. So that would leave a remaining loan balance for the buyer at $78,551. There's mortgage insurance that needs to be taken care of, which is a fee of $1,351. Closing fees paid by the borrower is $3,060.76. and then prepaid items and reserves, which is right up here, $1589.40, and that $3060.76 is all the closing costs from up here. So then approximate funds needed to close from the buyer is $2650.16. Now they need 3.5% down, so $2,800. So they will need $54.50 to be able to close this actual loan. So with that being said, even with us helping, they still need to come up with $5,400. Now, a different thing that most people don't talk about that we actually do is we work with a nonprofit that does down payment assistance. This individual made too much money, so she didn't qualify, but typically if they do qualify based upon HUD guidelines and members of the household, then they potentially could get up to $3,000 in down payment assistance, which she did not. If that was the case, then she would roughly have to come in at $2,600 or $2,700 in down payment to get going. So this house at an $80,000 price needed $5,400 in money to be brought to the table at closing, and most buyers don't realize that they need to have some type of skin in the game, because if they don't, then guess what? They don't get the actual mortgage. And in a future podcast, I'm going to talk about contract sales and what those look like, because most people don't realize that contracts don't get recorded, which means you don't get the home owner benefits. And also, it's not being reported to your credit bureau, so you're not improving your credit. So that's a whole nother podcast I'll do. And then on this right side here, it's monthly payment. It's at 4.625. APR is 5.88. And APR, if you guys don't know what that means, that is total interest rate that you're actually paying with fees or any other type of costs on top of your interest rate. So if they're charging you fees on a monthly basis or any type of other costs associated with the loan, that's factored in, and that's how you get APR. It's a 30-year fixed term. Her principal and interest is $403.86. You have real estate taxes impounded of $29.45. You have insurance of $88 a month. No homeowners. And then mortgage insurance, which is PMI, is $54.29. So you have a total payment of $575.60. So this person on a monthly basis will have to make a monthly payment of $575.60. Well, guess what? She's currently paying today for a one bedroom closer to $700. So she's saving almost $200 a month in her monthly payment, and she owns the house. She gets the homeowner benefits to where she writes the interest off from the mortgage. And by the way, she's improving her credit because she's going to make the payments on time to where those are going to be reported to the credit bureau. Unfortunately, if you do not make your payments on time, then guess what? They get reported negatively. So this is just a basic overview of closing costs on an FHA loan that we're actually doing on one of our houses. If you have any questions, comments, please feel free to reach out to me. Look forward to talking to you guys. Have a great day.